So let me just start with a softball, Peter. In kicking off this conversation, who's getting funded today in this whole, AI tsunami world that we're living in, and the
Yeah.
world with robotics and all this other great technology coming out? Who's getting funded and why?
Hmm. Well, you said the magic word or the hated word in some circles here because people are getting a little tired of it, which is AI, of course, has been the dominant story across Silicon Valley and all of startups over the last, call it two plus years now. I think the general sense from our data is all of those headlines are true. AI founders are getting funded at higher rates for higher valuations and more cash in every stage across the ecosystem. Of course, that begs the question, what is an AI company? What counts as an AI company? There's been many debates about, do you have to build foundational models? Is it okay to just call ChatGPT's API, et cetera, down the line? When you look at the data, the interesting thing is it doesn't seem as though, while there are significant gaps between, say, someone trying to build a startup to take on OpenAI or Anthropic and someone who's just trying to solve an industry problem using AI in their workflows, both of those things are getting funded at higher rates by investors. So one of the things that we are talking to founders about is you don't actually have to build your own models. You don't have to be some sort of deep AI research scientist, but you should be adopting this latest technology into your workflows with the point of solving customer problems that actually matter. And we've really seen an explosion of what were derogatory called wrappers, but are actually just wonderful businesses using the latest technology. I think that is kind of the wave of 2025. Um, Beyond AI, there's a whole host of things. The way that we talk about it, especially in terms of location, is there used to be this idea that you had to be in Silicon Valley or New York to start a startup. And I think that's totally untrue these days. There are so many places across the US that have wonderful, welcoming, fertile ecosystems to build early stage companies. What remains true is once you get big enough, there is this sort of siren song towards San Francisco where a lot of later stage companies end up being here, opening offices here, talking to investors here, of course. And that dynamic of start anywhere, but probably as you scale, you're going to interact with Silicon Valley. I think that's actually a fairly healthy one that we've seen in the last couple of years.
Is that because you're later stage and you've now raised enough money you can afford the rent and the people? And because when you say that, it's not like I can lift, shift, and move my group. I actually have to account for a 30 to 50% increase in expenses.
You do, although the
And I
rounds
got
are
to
at
worry about,
least that much bigger.
right. Well, I got
So
to also worry
actually,
about competing for talent too.
you certainly do. That's right. And there are proponents of San Francisco. I think